Have you ever wondered how much money you can get out of a reverse mortgage? If you're on this channel, you probably have. And let me tell you, there's more that goes into it besides just age and home value. Rates have a lot to do with how much you can get from a reverse. And so what we're going to do is we're going to take a look at right now, today, which is October 12th, 2022. We're going to look at historical interest rates. We're going to look at where the rates are right now. And then we're going to take a deep dive into, hey, how much can you get out of a reverse based on a few different ages, a few different home values, and then the HECM, which is the government reverse mortgage, versus the proprietary. But before we do that, just a real quick introduction. My name is Jason Eichmiller. I own and run this channel, Reverse Mortgage Reality. I'm not a YouTuber. I'm a reverse mortgage originator. I've been doing it since 2008 and have helped a little bit over 450 seniors learn about and get reverses. And my goal from this, kind of with the channel and with this, is to educate you as much as you can possibly be educated. So if you decide to do a reverse, you're confident, you know it can help. And if it doesn't work for you, then you know that it won't work for you before you start calling the reverse mortgage companies. So that's my high level right now. But if you could, this does take a little bit of effort. And what I'm actually going to be doing is every single Wednesday, the rates come out on Tuesdays for the most part. So every single Wednesday, I'm going to come to you just like this, and I'm going to share basically how much you can get with a reverse. It's kind of the same ages, the same loan sizes or home values, and the same whether it's a HECM or a proprietary reverse. So it takes a little bit of work, and I'd love to see, just make sure that you want to see this stuff. So if so, just go ahead and click below, just type in something saying like, hey, please show me what I can get out of a reverse mortgage. So if you do that, then I'll see like, okay, well, people are actually watching this and they want this information. They value this information. They want to know how much they can get out of a reverse. And then we'll kind of go from there. So first thing is, so I hope that makes sense. And actually, if you can hear me okay, go ahead and like the video if you don't mind. That would be absolutely wonderful. So getting away from that, now diving down into this. So how do we determine what you can get out of a reverse mortgage? There's three main factors. Most people think about two, but there's really three. So the first one, it's age. You have to be, wait a minute, you can be 55 and get a reverse mortgage. So the way age works is if you have to be 62 to get a traditional HECM, which is the government reverse, but you can be 55 to get the proprietary reverse mortgage. Now, if you want to learn the difference between the proprietaries and the HECM, I've got a bunch of videos up on that, but just go ahead and you can reach out to me in my contact info below, or you can just write a comment below and I'll get you out the info right there. But so age, the way it works is the younger you are, the less money you qualify for, and the older you are, the more money you qualify for. That kind of makes sense. I don't think that's, I think you get that. Next thing, which is pretty obvious, is we're going to qualify you based on your home value. And again, the higher the house is worth, the more money you get. Obviously, right? Not rocket science. The lower the home value is, the less money you get. So that's age and home value. But there's a third factor that almost nobody, kind of on my side, on the reverse mortgage side of things, shares, because it's kind of variable and we can kind of do what we want with it. It is heavily dictated by the economy, but what it is it's interest rates. So interest rates tell us, I'll give you an example real quick, but interest rates basically show us, they tell us, hey, how much money based on an age and a home value, how much can they get? And the way to think about it is, I'll just scroll down on this chart right here. This is the 1-year treasury rate, the 1-year T-bill. The higher the interest rate, the less money you can get, and the lower the interest rate, the more money you can get. So when interest rates are up, you normally get less money. When interest rates are down, you normally get more money. Now, we started off this year, 2022, with interest rates about as low as possible. And now they're pretty darn high. So what we're actually going to do today, as I told you before, we're going to go over kind of different scenarios based on the numbers right now, but we're actually going to compare and contrast rates from March 4th, which were, if I just move this stuff out of here, this is the 1-year T-bill, which is what most reverse mortgage rates are based off of. And if we look back here, and this is macrotrends.net, you can go here, you can go right here to Y chart. It's basically the same thing. But if we go to March, I think I did it off of March 4th, so I'm looking at the screen here. March 4th, 1 year, we were about 1.05, and let's look at this and just make sure we're at 1.05. About that, okay, yeah, March 1.05. And today, if we just, let's see here, let's refresh this sucker. I think that was, maybe that was October 11th. So let's refresh. I did all this data this morning, so the data might be off a little bit. But where it comes out with reverses, normally reverses stay steady during the week unless something like crazy happens. They stay steady during the week, and then on Tuesday, normally Tuesday afternoon or Tuesday evening, the rates for the week change. So here we go. That's let's do 1 year right here. So all right, so we see October 12th. What is this? What says October 5th, 6th, 7th. So it's not showing me the 12th here, but if I go back here to the Treasury rate, that's about 4 point something. Okay, so we understand that rates have something to do with reverses. So let's take a look here. I'm going to move this spreadsheet over if I can. Let's see here. All right, so we've got, let me move my face over here because I'm not important, but the information is. So we've got a few things right here. This is a spreadsheet. We're going to look at 4 of them. We're going to look at a $400,000 home. We're going to look at a $700,000 home. We're going to look at a $1 million home, and we're going to look at a $2 million home. And this way, you can kind of see the difference here. So let's look at this. Let's look at this first page here, and we see age, right? So we have home value, we have 1 year Treasury rate, and this is going to be, we go deeper in the $400,000 home, but then you'll get the point, and we'll just do 700 million, 2 million. We'll knock that out real quick. But we have rates from March 4th versus October 12th, and the money difference. And then we also have, for some reason I can't compare proprietary reverses from back then. I'm just going to give you basically how much money you can get from a proprietary reverse mortgage today. So let's look at first. So home value, $400,000. These are all based off the 1 year T-bill. It's a 1 month adjust, by the way, so the rates can go up or down. If you want to get into that a little bit more, just comment below or shoot me a message. I can go very, very deep into the rates, but it'll probably bore most of you to death. So let's look at age 55. Now remember I told you that at the age age 55, you can get a proprietary reverse. Can't get a HECM yet, but you can get a proprietary. So if the house is worth $400,000, then you can get a proprietary reverse of about $140,000. By the way, I should say, this is a disclaimer. This is an estate. I think I actually ran this in Pennsylvania. It works the same. The numbers will look just about the same in California and a few others. The numbers won't be as high in a state like New York or Florida, where there's a stamp tax and an intangible tax as well. And the reason why I can tell you that is this money, this 140, because people talk about reverse mortgage fees. They're like, well, what about the fees? The fees are already taken out. So all these numbers here that I'm giving you, all these numbers are net numbers, meaning if you do this, obviously it differs a little bit case by case, but if you do this, here's what you should expect out of the reverse mortgage. I got some percentages here too. So at 55, get a proprietary reverse. There are a bunch of proprietary reverses out there, but I just priced them all up against each other, and I picked the one that was going to give you the most money. So it differs a little bit as we go on. But at age 55, out of a $400,000 house, you're getting 35% of the home value. This is 35% right here, or about $140,000. Can't get a HECM, right? But you can get a proprietary, and again, it's going to be about 35%. Now, let's go to 62. But by the way, if you need to stop this, if you need to pause and write this down, go ahead and pause the video, write it down. I'll still be there when you push play again. So at age 62, $400,000 value, Here's where we're comparing March versus October. And what I wanted to do is I wanted you to see the difference, because not because we have a time machine. We can't go. My DeLorean is broken, unfortunately. I can't go back to March. But what we do expect, and for a couple reasons we'll get into later on in the video, but we expect the rates to continue to climb. And if you've paid attention to this stuff, then you expect the rates to climb as well. So from March till now, in March on a $400,000 house with a HECM, you get $154,600. Today, you can get $118,600. That's a 9% swing. So think about if you need a reverse, if you wait and the rates keep going up, what if you wait till next March? Might it be 25%, 24%, 23, 26? I don't know exactly what it's going to be, what the percentage drop's going to be, because that's dependent on where the rates go. But I do know, well, I don't have a crystal ball, but I'm pretty darn sure that you're going to be able to get less as time goes by. So we have, let's see here, 39% back in March. You get 30% of your home's value for a HECM right now, today. And if you decided to get a proprietary reverse, then you'd be all the way up to 37. So as you can see here, the proprietary reverses just almost mirror. There's some kind of like hot spots right here where they're just about the same as the regular HECM size back from March. So in a nutshell, and I'll show you a couple things, but until you're in your mid 80s, getting your proprietary reverse will always give you a little bit more money than the HECM will. Okay, so that was age 62. Let's look at 72. Same $400,000 house. Previously is $177,800. Now it's $143,000. So that's an 8-point swing right there. I kind of rounded up numbers a little bit, but 8-ish point swing. And if you were getting the proprietary, you're at 42%. So the proprietary is giving quite a bit more than the HECM. We move on. Let's say you're older. 82. You were born in 1940. Then you're getting 183, which is 46% of the home's value. The proprietary is pulling 53%. See how these are getting a little bit closer, right? This is a 7-point swing. It was 8, it was 9, now it's 7. And of course, both of those are less than the HECM back in March. Finally, let's say you're 92. Believe it or not, I do work with quite a few folks in their upper 80s and 90s, even a couple 100-year-olds. Most of the time, that's for home health care. So the proprietaries work really, really well for home health care. The HECMs work okay for it. Again, if you want information on how that works and the differences, go ahead and comment that below or shoot me a message. So, age 92, you were able to get 263 before. Now with a HECM, you're able to get 243,400, which is 61%. But now the proprietary actually dropped off. The proprietary still gives you more, but this is only giving you 57% versus 61%. So here's it's close to a golden rule. Reverse is normally going to give you more money. But once you get to your mid-80s, the HECM actually speeds up and gives you more money. I don't understand why. It's just kind of like they run off of different algorithms, but that's the case for the most part. You always want to test them up against each other, but this is something that's going to be proven when we look at the $700,000 house, the $1 million house, and the $2 million house. So by the way, if your house is worth somewhere around this value and you want to reach out, you don't want to see this, you don't want me to go through all of this, you can always reach out. You can give me a shout at 888-309-9705. You can email me at jason@keyhomelending.com, or you can you can go to reversequotes.com, which is the website you saw it in the very beginning of this. Just put in your info and we'll pick a time to catch up with each other. So, all right, on with the show here. We got $400,000. Now let's look at the differences if the house is worth $700,000. So, I took away, you guys get it by the way, you know that now you can get less than you could get before, and when rates go up, you're going to be able to get less than you could get now. I get it, you get it, I'm not trying to beat a dead horse here. So, now let's look at $700,000. So, same thing, 1-year treasury rate isn't different. But at age 55 on a $700,000 house, you're able to get $245. Again, just a proprietary, not a HECM, because you got to be 62 for a HECM. At 62, the HECM pulls $215. The proprietary pulls $258. At 72, say you were born in 1950, the HECM is giving you $257,600. The proprietary is giving you $294. 82, $326,800 from the HECM, $370 from the proprietary, and 92. Look at that again. HECM's winning the day. The HECM is giving you $431. The proprietary is giving you $400. I'm going to take a sip of water. Cool. So that was a $700,000 house. $1 million house. This is where the HECM maxes out, because the maximum home value for a HECM, again, government reverse, is $970,800. So you're going to see this. These numbers are going to be the same for the HECM at $1 million and $2 million for the reason I just told you. So let's see, $1 million house, 55. You're getting 35%, 300. Look at that math. Whew, I'm quick. $351,600 on $1 million house with a HECM, or with the proprietary. At 62, when the HECM comes into play, the HECM is giving $299. The proprietary is giving $370. At age 72, HECM is giving $358. Proprietary is giving $420. By the way, look at this. The HECM is giving basically the same amount at 72. It's probably at 70, as the proprietary is giving at 55. Drastic difference. That's 72. Now let's look at age 82. HECM's giving $456, about 45%. The proprietary is giving 53%, $528. And age 92, again, the home health care cases, or if you really just need a decent amount of money quickly to stay in the home, the HECM gives 60%. That's a huge jump from 45. Look at this, from 45% to 60% in 10 years. Whereas the previous was about a little less than 10%. So 15% in 10 years versus the proprietary that's only giving about a little bit less than 5% over 10 years. So again, mid-80s, this is probably for your folks. Mid-80s to 90s, hell, early 80s too. Check them both out. Figure out what's going to give the most money. Now I do, by the way, disclaimer, sort of a disclaimer. There are different reasons why one would do a HECM versus doing a proprietary reverse. There's different characteristics, different rates, different fees, different ways you can take it. That's not for this video. That's for another video. So if you want to know that, I'll have a video linked below, or just go ahead and comment below, shoot me a message, and glad to explain the differences. And with every single person that I help, we'll look into your situation and we'll figure out, hey, this is what they need it for. This is what's going on in your unique world. So this is what, and you can do whatever you want, but heck, I've done over 450 of these, so I think I'm a pretty good, I've got a pretty good roadmap for you. So I'll give you my advice on what I think would be the smartest thing for you to do. All right, $1 million down. Let's do $2 million. Now we know, again, with $2 million, the HECM is the same because the maximum home value is, again, what is it? $970,800. So that's going to be the same. But if we look at the proprietaries, we've got 704, so 35% at 55, 742 at age 62, 842 at 72, 1.05, almost 1.06 million at 82, and 1.14, almost 1.15 million at age 92. Again, kind of see the difference. Once your house is, if you look at the differences here, once your house is $1 million or more, a lot of times the proprietary reverse makes sense. And by the way, I know I seem like I'm very bullish on the proprietary, and I am, but there are definitely circumstances like when you need a line of credit or a couple others where the HECM will win the day. So again, ask questions. Don't just assume that the first thing that the reverse mortgage person gives you is the right thing. Dive down into it. Ask for a comparison of the HECM versus the proprietary. And then you decide. Listen to your reverse mortgage expert, though. We're an expert for a reason. So that's the those are the different amounts that you can get out of a reverse based on different ages. And this is today. This is like brand new, October 12th, 2022. And I'm going to share once a week or so, every Wednesday if I can. Every Wednesday I'm going to come back to you and I'm going to share, okay, well, this is where we're looking this week. The rates have gone up or the rates have gone down. Now, let's look at very quickly, let's just look at a couple of, I'll put up the website here. So if you go to reversequotes.com, you just put your information in here and click get quote. You can see a couple of videos. I've got a bunch of client testimonials and letters and stuff here. Anyway, let's look at what are the possibilities of interest rates going up over the near future versus going down. Now, very near future, the rates could pop down a little bit. They're gonna be going like churning a little bit sideways. But over time, we know that the reason that they've gone up, we know that it's been COVID, right? We've had supply chain issues. We've had the war in Ukraine. All that stuff has really contributed to bringing rates up. And then we talk about what the Fed is doing. So the Fed has been consistently increasing rates. And we've got one more Fed meeting in November, and we've got another Fed meeting in December. Now, the way it's projected, who knows what they're going to do, but they project that the Fed's going to raise rates 3/4 of a basis point, so that means, or 75 basis points, 0.75% in November, and maybe 0.5% in December. So if what everybody thinks is right, interest rates are going to go up another 1.25% or so. Now, getting back to the beginning of this video, what does that mean to the money you can get with a reverse mortgage? If rates go up, what happens? Do you get more money or do you get less money? Go ahead and comment below. All right, good enough. When the rates go up, again, you get less money. Once I think things calm down, and once the Fed stops artificially jacking these rates up, and it's probably going to be in a couple years, what will happen is we'll hit a ceiling and we're going to come down, or we're probably going to come down pretty rapidly. And again, once rates start going down, what happens? What happens to the money you can get with a reverse mortgage? Goes up. So just understand that if you need to get a reverse now, or if you're considering it now or in, say, 3 months. Well, there's one more thing before I go down that rabbit hole. Quick rabbit hole, though. This is 22 minutes long. The other thing we've got to think about besides interest rates, we do have to think about home values. So in a lot of areas, what we've seen with these rates going up, fewer people can afford, or the same money can afford less of a home when you're buying. And that's really what drives the housing market, right? It's what people are willing to pay and willing and able to pay for a house. So what we're seeing is house prices, whereas 3 or 4 months ago, they were like all the way up here. These houses were getting multiple offers. I do regular mortgages too, by the way. I'm in it, in the trenches on these offers, right? Clients who have pre-approvals out right now. So what happens is when prices start to soften, then you don't have to spend as much on the house. That means once these sales go on record, as they're starting to, we'll see home values start to drop a little bit. They're going to drop, and they're going to drop, and they're going to drop. And it's not going to slam down, but we're definitely going to see house values drop. So we've got two things working against ourselves right now. Just being honest, right? I'm not here to tell you what you want to hear. I'm here to tell you the truth. The one thing that's working up against us is interest rates going up because you get less money. The other thing that's working up against us is home values dropping, because when home values drop, again, you get less money. You understand, this is not rocket science. So my message to you is, if this is a long shot and you're just looking at interest rates, keep on looking at them. You know they're going to go up, and you know you're going to qualify for less for a reverse. If you're thinking about doing a reverse mortgage within the next year or two, strongly consider looking into it, and looking into it deeply as soon as possible, because our house values are still really high, although they've softened, they've dropped a little bit, and rates are going to be higher later on than they are now. So if you need to milk cash out of your house, whether it's getting a line of credit. Let's say you're 62, you're in your early 60s, and you just need a line of credit to open up a kind of a retirement safety net. Or you need home health care, or your parent needs home health care. Or you need to get rid of your mortgage, but you got some credit cards as well that you need to get rid of. Look into this now. I'm not saying do it now. I have no idea if you can qualify or if it's the right thing. But look into it sooner rather than later so you know if this makes sense. And if it makes sense for you and you need as much money as you can get out of your house, most folks that I talk with are starting to do the process now. So anyway, that's my big pitch. That's my my sales pitch, I guess. So I appreciate you going through this with me. I hope it makes sense. If you have any questions, again, comment below. If you want to see this every single week, again, it takes a little bit of time. We're on 25 minutes right now. It takes time to do the research. Go ahead and comment below. Tell me that you want to see it. And I appreciate that. That helps me kind of see that this hard work is for good and does you some good. If you want to get in touch with me with questions or want to see how a reverse can work for you, you can call me. You see right on the screen, 888-309-9705. You can hit up, go to reversequotes.com, or you can email me at jason@keyhomelending.com. All right, that's it for now. This was the first one of these, so hopefully next week and the week after will be a little bit quicker, a little bit smoother. But I appreciate your attention. I appreciate you sharing your time with me, and I wish you the very best. Take care of yourself.